Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 64. On today's episode, we're going to talk about fear and anxiety. There are a lot of news stories that we listen to, that we watch, that all discuss, things from a negative perspective. And so I want to share with you some of the research that's been done that shows just how negative these stories have become, how we are more likely to click on negative stories, to bring those negative stories into our mind. And so I want to share with you how that impacts your behavior so that you can protect yourself from it. And when I say this every time we start, get your mind right, this is what I mean. You got to protect your mind. So get your mind right and let's get to work. Well, thank you again for joining me for another week here. The market finally had a good week, snaps a 3-week losing streak. So finally, a little bit of relief on that. The market was completely oversold. And, again, you got to be thinking long-term in this kind of choppy market. I mean, the choppiness of this market is going to continue, but if you use it to your advantage, I think that you're going to find yourself in a really good position in the next couple of years. And so I encourage you to, take that first step if you haven't invested yet to do so. So this week, I wanted to talk about fear and anxiety because with everything going on, I hear about this more and more and more from clients to students to people that, I have a lot of conversations with people on a daily basis, and sometimes I'm still shocked by the number who, that you would never suspect would be worried about things, or you would look at these folks and think, man, I can't wait to be them one day so I don't have to worry. And yet I have conversations with them and, they are worried. And so it's just amazing to me that it really doesn't matter what your financial status is. People worry regardless. And so I think that there's a myth out there, especially in the financial world, that if you have more money, that at some point you will no longer worry. And I'm here to tell you that is not the case. I know people who make, and this is going to shock you, I know people who make over $250,000 a month that worry more than people who make $2,000 a month. And so, it's not a financial question. It is a internal question of what can you do to try to lower your levels of anxiety, depression, and fear. But the problem is that everything, or not everything, but most of the things that you watch, most of the things you read are going to be negative in some capacity, right? And why is that? Why are most of the news stories that we watch negative? Well, if you look at some research, it shows that 90% of all media news is negative or sensational in some respect, where they want you to click on it, right? We hear this thing, clickbait. I cannot tell you how many times I'm watching CNBC, reading an article on Yahoo, and the headline will be, "This stock is getting destroyed today." And I'll look at it and it'll be down 1%. And I'm like, well, that doesn't really gel. That doesn't really go together. The stock isn't getting destroyed. It's down 1%. But did I click on it? Yeah, I did. I fell into it just like everybody else. And so, when you look at that, there's just so much negativity out there. And so you really have to be proactive with your own mindset. You have to be proactive in being able to separate your emotional and your intellectual brain to be smarter than all the negativity that's out there. And so, it shows that one in 10 American adults check the news every single hour. 1 in 10. So 10% of the U.S. population checks the news every single hour. And honestly, I cannot think of anything that would be more negative towards your mental health than doing that. Right? Because when you watch the news, think about, most of the stories that you're going to see are negative. And what's interesting is how people's days are set up, right? So most people, the last thing they do before they go to bed is they watch the news. And then the first thing they do when they get up in the morning is they watch the news. So they have negative news before they go to bed. So it's what they think about when they go to bed, right? It's the last thing they're thinking about. And then when they wake up, they watch the news to find out all the bad things that happened while they were asleep so that they can now worry about it for the rest of the day. And that is not a healthy place to be. That is not a healthy place to be mentally, especially if you're somebody who fights off negative thoughts on a regular basis regardless. I think I'm fortunate. I'm more of an optimist. I mean, I go buy a lottery ticket and I convince myself by the end of the week I'm going to win, and then I'm disappointed if it doesn't happen. So, I'm much more of an optimist, and I'm just amazed at how negative, some of the things that we read are, have become. I mean, especially on social media and whatnot. I just think, God, I mean, if you really want to be brave, go into the comment sections on some of these stories and try to be positive by the time you leave reading those things. I mean, my goodness. I mean, who are the I'm just kind of digressing here, but who are the people that are the people that are making all these comments all the time? What are they doing with their life? I mean, do they have any goals? So anyways, some other studies that show that headlines with bad news catch 30% more attention. And, 26.7% of people that are exposed to negative news go on to develop anxiety. Right? So 25, let's call it a fourth of the people that are seeing negative news stories are going to get anxiety over it. And then, 79% of media companies print biased stories for advertisers, because they know that if they put a negative connotation to it, it will get more readers. So there's an example here from Industry Week, and it shows these two headlines. These are sample headlines. This is not real news. This is just a sample. But one of them is U.S. industrial manufacturers expect lower growth for the next 12 months. And the other article, the same article, U.S. industrial manufacturers expect growth rate of 5.7 for the next 12 months. Which one will they use? Well, they're going to use the one that says lower growth rates over the next 12 months because they know that it'll get more clicks. And so, and again, another source showing that 49% of people are more likely to read something negative than positive. And the problem with this is that it really starts to impact, especially younger generations. If you look at the American Psychological Association, they're showing that millennials and Gen Z have more depression and anxiety than any other generation previous to them. Right? So more anxiety and depression than baby boomers, than Gen X. And it makes, you don't have to be a rocket scientist to figure this out, but think about when you look at a millennial, especially older ones, what kind of period of time did they grow up in? Well, I mean, their life started with 9/11. You have the financial crisis, you have COVID, and then intermixed with that, they're the generation that grew up with school shootings. So, I mean, the first major publicized school shooting was Columbine in 1999, and I was a senior in high school. So everybody, younger than me has grown up with school shootings being on TV every year. And then we're shocked that this is the most anxiety, that this generation has a lot of anxiety. How could they not? Right? Of course they do. So what are some of the what's the impact of having a lot of anxiety or depression in your life? Well, for some of the things that it impacts is just your ability to make decisions, wanting to be safer. We're seeing that this generation is less likely to start a business, to be an entrepreneur, because they want something that's safe and secure. So that's going to impact the country long term. There's other not investing, delaying investing because they're just not quite sure that they can handle the volatility that is created. I know this is that seems interesting because of the meme stocks and crypto and all that. And yes, you do have a segment that has done that, but overall, there's not as many in there, that population that's investing on a regular basis. And so all of these things come to, it makes a difference. It makes a huge difference because when you start investing young, when you're young, it's like pushing a snowball down the hill. But if you just go to Google and type in millennials afraid of investing, you'll pull up article after article. And there's one that shows that it's millennials are the only generation that currently favors cash investments over others, which I know if you're listening to this isn't the audience. I mean, like if you're obviously, lined up if you're listening to this podcast, but you probably have a lot of friends, coworkers that you're working with that, if they're not listening to somebody, talking to somebody about this, it's going to be a real problem because if you miss the early years of investing, then later on you're trying to play catch up. But it's hard to invest and put your faith in something if you're worried and you're anxious. And so, when I was younger, I would listen to, I stopped watching the news way early on because I started noticing the negative impact that it would have on me and others. And I really started listening to Jim Rohn a lot, which, that you can kind of pick your person. I've never been like a Tony Robbins. I don't know. For some reason, I've always gelled with Jim Rohn. And I started listening to him when I was like 24, 25 years old. And he talks, the things that I say, he talks about this, 80% of the people are watching things they shouldn't watch. They're not reading anything. They're not protecting. They're not being a gatekeeper to their mind. And so you have to be very proactive with the things that you're watching, reading, and not just being kind of a zombie. You have to protect it because little things start to creep into your mind. So there's something called negativity bias. And, negativity bias starts to impact the way that you think. It starts impacting your decision making. And when I started doing a lot of my behavioral finance studies, doing my doctorate degree, I came across Kahneman and Tversky, who are the grandfathers or the guys that are the behavioral finance guys. And they talk about negativity bias and how negativity can, like if you overemphasize negative thoughts, they impact the ability to make choices and take risks. And it basically turns people into popsicles, where it's this paralysis by analysis where you think everything has to be perfect before you're willing to make a decision. And, you've probably had friends that are that way. I'm going to start a business when I get this done. When I get this done, I'm going to do this. It's just not the way it works. It's never going to be perfect. And if you're constantly thinking about the negative aspects of something, you'll never get started. And so you have to believe in something. And believing in yourself is a good place to start. Being resourceful, building up your skill set so that you can earn more money, so that you can invest more, so that you can be more is where you need to start. And so for me, that person was Jim Rohn. And I still to this day enjoy listening to him. And, you just kind of got to find that person that helps you stay grounded. And so for me, when I was changing, changing majors or changing careers, starting my business right after the financial crisis, he was the one that anchored me. And so one of the things he said was, you should set a goal to become a millionaire because of the person that you will become in getting there, meaning the habits that you develop, the discipline that you develop, all of these things. And so when I was working hard, studying, building my business, getting turned down, all of these things, I would say to myself, okay, if I fight through this, I'll be a millionaire one day. I'll be a millionaire one day. And for me, it wasn't about being a millionaire. It was about the freedom that would create for me. I'm more motivated by the freedom than I was the money. But the problem is that Jim Rohn was so wrong. He was so wrong. He wasn't teaching me to become a millionaire. He was teaching me how to make $1 million a year. And when I was 25, I did not understand that. But at 40, man, I'm just getting started. And the fact of the matter is if you have a mindset that blocks out negative information, that you're able to navigate the negative news cycles that you know are going to come around, because you can look back at a stock chart and you can look at things in the early 80s and say, man, I wish I would have bought then. But the problem was what was going on in the early 80s? Inflation, the Cold War, a bad recession. But on a stock chart, it looks like, man, I should have bought then. Well, there's going to be negative stories this year. There's going to be negative stories next year. In 10 years, there's going to be negative stories. And so you have to figure out a way that works for you to be able to combat that so that you can create the life that you want for yourself. And so, whatever you have to do, it starts with like the negativity bias and Kahneman and Tversky. One of the other things that they showed is that people are twice as impacted by a loss with their money than they are a gain. So I know that going in with clients, if I lose them money, it impacts the relationship on a negative basis by twice as much as when I make them money. And the reason that these negative news stories, nobody goes into investing expecting to lose a lot of money. Nobody goes, man, I can't wait to invest today. I hope I lose a lot of money. As humans, we expect good things to happen. We expect the choices that we make to work out. And so when that doesn't happen, we carry that with us. If somebody makes a negative comment to you, you think about it for the rest of the day. If somebody walks up to you and goes, man, you okay? You look kind of sick. You sit there and go, what? No, I'm not sick. But for the rest of the day, you sit there and think, why did he think I look sick? Right? We hold on to negative comments, negative thoughts, negative stories. And so you have to be able to manage those, because even the ones that are people that you think are successful and people who are successful, it's not that they don't feel the negative comments. They don't hear them. They don't see them. But they process them differently than those that don't. And you have to be willing to step into the fire. And especially when it comes to investing, and I say this all the time, you have to invest. You have to buy when you don't want to buy. And sometimes you got to sell when you don't want to sell. And the point to that is that you have to be willing to buy or invest in a company when nobody else wants it. And you got to be willing to sell or trim some of your profit when everything looks fantastic. And if you can do those things, if you can master your emotions and you can do those things, you can make a lot of money and you can provide a life for yourself you've never thought you would be able to provide, and an ability to provide for your children, grandchildren, whatever your goals are. But first, you got to be able to master your emotions and be able to handle that. That makes more of a difference to me, especially when it comes to investing. Mastering your emotions and not letting them dictate your behavior makes a huge, huge difference. So I'm going to share with you one more investment tip on this, something that might make you feel a little bit better kind of as we wrap this up. Okay, so before I give you the investment tip, I just want to give you some general ways to improve your anxiety if you have some. The number one way is physical exercise, right? Getting out, taking a walk, doing a workout. spending some time doing some self-care for yourself, unplugging a little bit, reducing your screen time on your phone, preventing those negative thoughts from coming in, having a healthier diet, the things that we discuss on the podcast. I have interviews with people about getting better sleep, practicing mindfulness, meditation. Like, these things work in helping people. All right. So for the investment tip that I want you to think about, one of the things that I do that helps me think about a stock, maybe I'm in a stock that I'm negative on, right? That I'm losing money on, or it's just having a bad day. Maybe the stock's just having a really bad day. One of the things I like to look at is I like to look at the volume of the stock and to see how many shares are trading. So whatever investment platform you go to, if you look at if you go and wherever you're looking at it, where the screener that you're looking at, let's say you pull up Amazon. I know I mention Amazon a lot. I just like to use companies that people are familiar with. Well, it'll tell you what the volume is for the company and how many shares, average shares trade a day, and what the volume is that current day. So a couple of weeks ago, I used this to my advantage because the week before Labor Day, I know that that is the least traded week of the year. Like that week has the least amount of volume of any other week of the year. And so it was a bad week, but I use that to my advantage because I go in there and start snipping up shares for people because I know that it's a lot of retail traders trading that week and not institutions. So you go look at the volume of Amazon. The average volume is 61 million shares a day. And so this past Friday, 50 million shares traded. But like if you use finance.yahoo.com, you can go and on the far right, it'll tell you the holders of the account. And it'll show you how many shares are owned by institutions, how many shares are owned by insiders. And so you can see what percentage, and this one says 60% of all the shares are held by institutions, 10% of the shares are held by insiders. So right there, you're at 70%. And some of the top institutional holders are Vanguard, BlackRock, State Street. Those are the largest mutual fund or ETF holders in the world. And so, and then you have mutual fund holders showing you how much of their shares are owned by them. And so you start adding this up, and normally the big institution holders, the insiders, are not the ones that are trading on a daily basis. Most of the time, the ones that are trading on a daily basis are retail investors. And so, when you look at the companies that they're trading through, TD Ameritrade, Schwab, Fidelity, Robinhood, pick, all the places that retail investors trade through, how do they make money? Well, they make money based on people's activities. So those negative headlines that you're seeing, they are trying to provoke an emotional response from you. They are trying to get you to take some sort of action. And the action they want you to take is actually selling the shares. They want you to create a lot of activity in your account. Well, go back to Kahneman and Tversky, the negativity bias. One of the number one ways that you can improve your performance in your investment account is to not take as much activity, to basically set a challenge for yourself to try not to have that many sell orders in a year, right? Basically sit on your hands. So when you realize that when you look at a company, you look at the number of shares that they have outstanding, right? You can look up how many shares outstanding they have. Look and see how many of that is owned by insiders, how many of that is owned by institutions, and start to realize that a lot of the activity that you might be seeing in the stock is retail investors that aren't going to be staying in it very long. And so if there's a negative day and the stock is down a lot, but it's half the activity that as normal, then I know that it's not the institutions that are selling, it's retail investors that are selling. And maybe I want to pick up some more shares because in the long term, they're going to be wrong and I'm going to be right. So I hope that is helpful for you, as I say every week. But seriously, think about your mental health. Think about the negativity, the negative stories that you have coming into your your mindset, and figure out a way to be proactive to prevent that from really impacting your decision making. All of these things flow together, right? So all of these things flow together. I hope this has been helpful for you, and I will see you next time. Thanks, everybody.